Today's lesson is going to rock. I've got a quick lesson about psychology. I've got an update about YouTube trip to Austin with Carlos. And boom, my updated watch list, which makes this the most important video of the entire week. So the lesson, psychology. I call this lesson my bank account. You've never heard me talk about this. Now, why do I call it that? Because I look at my bank account daily. I open up all of my trading accounts daily. Why? It's habit. That's not a real answer. Why again? Because there were times in my life when we all struggled. We look at our accounts to make sure we can pay the rent, pay the car lease, have money for food, etc. I mean, I remember the days years ago, I had like $2,200 and then I had my expenses. I'm like, all right, I wrote all these checks out and it should make me like negative $100. And I was waiting to see which check would bounce or if I would get money in time to make all the checks go. So this is the lesson. The lesson is I have to change the way that you're thinking. All right, you're checking your accounts like I did. Maybe you have money and that's a rarity. Maybe you like to check to make sure it's real and it's there. Whether it's your trading account and you took profit and your account went from like 2,000 to 10,000, you keep checking to make sure your account's still at 10,000 because you remember it at 2,000. So that's your psychology. You have to understand that. So I want you to know the money's going to be in your account. You don't have to check your bank account. You don't have to check your trading account, okay? When you're ready to do your next move or execution, that's when you go. That's when you figure things out, all right? If you do the right thing, your account will continue to grow. So I spoke about checking my account 2 to 3 times a day. But let's talk about good habits or good traits for you to pick up on, all right? And then I'm going to put that into a context for you. So let's say you have a small trading account of $500. Let's say you trade with Robinhood because you haven't switched to a cash account like I tell everybody. So if this is your first time watching me, cash account, all right? And I'll explain why a cash account. It's easier to enter into and out of trades. You can't recycle the same money on the same day. If you enter into a trade today and you sold, you have to wait till tomorrow to use that money again. But a cash account is key. All right, but let's say you're still using margin. You like Robinhood for some ridiculously insane reason. All right, and you're limited to 3-day trades in a 5-day period. If you trade 4 trades, you're going to get a 90-day ban. All right, so knowing that, you now know your object. Your object is, I don't want to rush into any positions. You know what your goal is. Your goal is to take the first trade and make like $120. So remember, you have $500. You have all the time in the world. You're going to enter 3 trades in a 5-day period. And on that, you're going to look for a measly like 24% return. Now, when you're trading options, 24% isn't that much. You get a great entry and you plan ahead and the stock spikes a little and you're out at 24%. So that's not a really risky trade. And again, unlike the other gurus, I'm not telling you what stocks to go into. I'm going to talk about my watch list, but I'm not going to tell you have to go in or out. I'm going to tell you what's going to happen to those stocks depending on the market condition. I'm going to let everybody make their own decision. All right, but back to the lesson. So you get a 24% return. Now, my trades last week, I was 17 out of 20. 17 winners had at least 22% return. So I'm damn close to that 24% return that I mentioned. All right, so you're taking small steps. Again, the goal, small steps like when you're on a subway, okay? You don't go 30 blocks. It stops every 5 blocks and makes a stop, a limited stop. You know what I'm saying? Same with you go through the alphabet, A through Z. You're not going A to Z. You're like A, then I go to B, C. You got to hit every single step. So here's the goal. You've got 3 trades in a 5-day period. I tell you to make 24%. All right, you do that and you're going to return $120 per trade. So at the end of week 1, your $500, let me just think, is going to be up about 72%, or you'll have about $860. Now you might get overconfident and be like, all right, well, next week I'm going to step up my game. I have more money, so I'm going to make more money. And my answer to you is no. If it's not broke, then you don't break it. You don't change it. If it works and you find something that works for you, then you keep doing it. All right, so like when I hear from my traders, they had a winning streak of 8 green days in a row broken. I know it's sad, but before they found the platform, before they found me on YouTube, they used to have like 2 winning days in a row, then 2 losing days in a row. So now it's like 8 winning days, 1 losing day. Oh, shit, I'm upset about that losing day. I need to refocus. 5 winning days, 1 losing day. 4 more winning days, 1 more losing day. So if that is not you and you are struggling, then yes, the first thing you should do is subscribe to the channel, because I'm going to give you lessons every day that's going to make you more efficient at trading. All right, so before I talk about our watch list, that was your lesson. I'm just going to explain. Carlos and I went to Austin. We just got back from YouTube's financial conference in Austin. Now, why is that good news? Why do you guys care? Because everything that you're watching me, it's to benefit you, to make you a better trader, to make you better at whatever it is. So I went to Austin to make me better at giving my information to you. And I learned a lot. I learned about the way that I have to disseminate my information. You guys know I get excited. You know I talk really fast. I want to tell you everything in the market that's going on so you can think like me. I'm like, okay, well, China's doing this, the 10 years doing this, whatever it is. But really, I need to just simplify it. If I see the market's going up and I can explain why the market's going up to you in a simple term, or why it's going down, that's what I'm going to do. So that'll lead me into the market right here, and then we'll talk about my stocks. Market right now, I mentioned this about 3 or 4 trading days ago. I think it was Tuesday when I said there was a rotation from tech into Dow stocks. Now, it happened Wednesday, Thursday, Friday, and today. So you've seen 4 straight days. The 10-year, which basically controls tech because it makes it more expensive to invest in tech stocks that don't really have that great of earnings. Okay, so as you see the 10-year, which I think is what, like 1.40 or maybe even 1.49, I think I saw it at last. That's pretty crazy. People are saying it's going to come very close to 2% by the end of the year sometime. So understand, if it's at 1.5 and it's going to get worse for tech stocks, then those are the reasons you do not want to be in tech stocks. And again, my watch list, I'm going to talk about tech stocks, and I'm going to talk about Dow stocks and which are related to which indice, and depending on the market, and I'm going to give you, like chess, 2 scenarios. The stock goes up because the market. All right, so let's get into my watch list, because that's why you guys should be here. I mean, the lesson was goddamn good today, and now that I have the light bulb moment, I'm going to teach much better lessons going forward, more concise, more detailed, and make sure I can explain the point. All right, so let's get to my watch list. I've moved a lot of stocks around since the last time. So on the top of my watch list is a stock that I've been bearish on. Okay, most of these, I'll say 99%, I have no current position. Remember, I like to day trade. I go in, I go out, I make 30%, 40%, 50%. I do it multiple times a day. Not huge positions. I'll buy 4, 6, 12, 15 options. My first purchase is usually anywhere from 1 to 4 options. So I'm looking to make, 500 per trade, less risk. If I'm incorrect and the market takes a dump, I don't want to have $30,000, $40,000, $50,000 invested in options. I'd rather have a few thousand, maybe. If I decide to get out or take a bearish position, I could jump on the other side and make profit that way without having to covering myself with like another 50 or 60,000. I mean, all that does is lead to stress. So when I tell you guys, simplicity is the best, okay? Less positions. Understand my lesson about knowing a stock like family. All right, so the first stock, and I'm going to ramble off a bunch of them. Look at the 1-month chart with me, and you'll see exactly what I'm saying. So if you have Webull or Robinhood, use the 1-month chart. First stock, QDEL. Let's open it up together. 1-month chart, what do you see? 4 straight days after it peaked at 157, 4 straight days of outflow. So what does that tell you? If tech continues to be beat up and this stock is at $141, there's a good chance that it goes down to 129. Now, if it goes down 12 points in the next 3 or 4 days, if tech continues to be beat up and the 10-year goes up, then we can make huge returns buying puts. We didn't miss it, so it lost 3.5% today. Guess what's going to happen tomorrow? Probably history repeats itself, and if it loses 3.5%, it's probably going to go down to 136. So again, my prediction, if the market stays like it is, 129 within a week or 2. All right, there's definitely money to be made. The next stock, okay, I've got a bullish position here, right? CCJ, which is Cameo. It's on the New York Stock Exchange. It's a Dow-related stock. If you look at the 1-month chart with me, and you'll look with me, it had like 12 or 13 straight outflow days. Okay, people were selling, and it was finding a new low. This is after, okay, I can show the chart. Sure, Carlos. See all that yellow? That's my outflow days, okay? So you got 13 in a row, then you got one green inflow day. Point is, I look at my charts on my phone most times because I like to sit out of my charts. So when you think I have all these different equipment and algorithms calculating, this is the greatest thing. I remember, quick story, back in April, somebody follows me on Webull, and I have 13,000 followers there. He wrote, this dude, Matt, is on point with his predictions, but there's no doubt that he's sitting in a crazy office with at least 6 different computers going on, feeding different algorithms to come up with his predictions because they're so on point. Now, remember, in April and May, volume in the market was up. My predictions were on fire. Guess what I told Carlos today? I was like, Carlos, I'm seeing the market so clearly, which is why this is such a great episode for my watch list. And I really hope people tune in today because I'm going to talk about everything. All right, so CCJ, look at the 1 month. We have, 12 or 13 straight outflow days. Finally, an inflow day. Now, it did already start to turn around. So it was on my watch list. In fact, I almost gave it out at $20 flat. And I said to Carlos on Friday, the stock could go under $20. I don't want to give it out as an alert and then have it drop to 19. So it's closer to 21. It's a fine time to get in. Carlos thinks it's funny. Remember, there's only one little green thing here. So you'll buy a quarter position, meaning you'll buy 4 options for next month, let's say October 15th. That's what I did. It goes down. Guess what? I'll buy 4 or 8 more. Always have strategy. What's my exit strategy? Matt, are you looking at it to go back to 26, 27? I don't really give a crap. What do you mean you don't give a crap? I'm looking to make 50% and get the hell out. I love making 50% of my trades because, number one, winning mentality. Every trade I close out with 50%, I get to call myself a winner. So I'm like, hey, you're winner, winner, winner. And then you know what I do? I tell them, pay me. I tell them, pay me. When I close out a trade, pay me. That's a double tap. You guys are welcome to steal it right now. I gave out an alert today, and it's QS. And I didn't open that one up yet, but let's look at that. Let's skip down. Here it is. QS. Why? Because look at this. Look at this chart here. You can kind of see it, right? You see all those green big bars? That is demand and inflow. And when they sell off and it consolidates, you get little outflow bars. So I told people today, I'm going into it. It could go lower today. Get a better entry than that. I paid $1.98 for my calls. Then it went down to like $1.75. Yes, I know you guys beat me by 10%. Guess what I did? I averaged down. I'm in for $1.84 right now. I'm going to make money. And then what am I going to tell them? Pay me. All right, next one. Let's get another stock up there. So I really like QS. Okay, 2 more. Also bullish about both of them. They're 4-letter stocks, which makes them tech-related. So I told you it's a stock picker's market, meaning just because I tell you tech is going to struggle over the next, couple of weeks while the Dow gets stronger, you could still be invested in certain tech stocks. Now, the first one, I will never take a position here, but it was alerted by the Nigerians. Jim Cramer says he likes it, all right? It's SoFi, SOFI. There's demand. There's inflow. There were a ton of people that bought these $18 calls that expire 1 and 2 weeks out into this week and then 2 weeks out. I don't like the stock. I think Jim Cramer's an idiot. I'll never support this stock in anything he plays. I would like to take the other side of that. But I feel an obligation. It's on my watch list. So, yeah, there was heavy option buying activity. Now, a stock I've mentioned before at $19 and $18, Open Technologies, OPEN. Now it's $21. I could have sworn it 21 was the high today. Now, if you look at this, all right, you see all that green? Like 9 straight inflow days. So when I spoke about this stock, it was 18, but it went as low as probably like 16.90, whatever that day there was buying. I bought the next 2 days. I'm in stock only, but the options would be crushing it. It stocks up like $3. That's like 18%. That means my options would probably be up like 150%. Doesn't matter. I still like Open. Oh, and I didn't answer how far it could run. So let's see. Even though tech's struggling, I mean, look at it. I just can't. I'm amazed by Open. You guys really have to look at the 3-month chart of this, right? So I'm going back to August 11th where there was a spike that took it over $17. Now, if you count the number of inflow versus outflow days, and there were 4 outflow days to start. So if you go to August 19th, there have been 5 outflow days and probably like 25 inflow days. It's like betting on like the Dodgers or something like that. They win game after game because they're the better freaking team. So there's inflow day after day. So just give Open a look. Again, I have stock only. It could go up $10. I'm not going to retire. It would have to go up like 20,000 points for me to decide I'm going to retire off that one, because I only have a few thousand shares. So I would need like $60 million if I wasn't going to talk about it anymore. So if I'm going to pump a stock, it's going to go from $20 to $20,000. And since that'll never happen, I will never be pumping a stock. Oh, next play I gave out as an alert today. LAC, right? Lithium America. Because why? The stock's been beaten up ridiculously. It was as high as like $24, $25. It had one outflow day, and then it's kind of working its way back. So please look at that one. Let's look at the 1 month together. LAC, there was good demand today. It doesn't look like it's spiked yet, which means the spike will take it over $25. So I actually have option positions here that expire October 15th, which is like what, 17 days now, 17 trading days. I expect this stock to be over $25. Again, this is an energy play. Energy stocks are good. I mentioned on my platform, XLE. I probably mentioned the alert a week ago that someone was buying mega options, and that ETF has been up like $2.50 since, which with that ETF is a big mover. Somebody's making a killing. All right, so that's LAC. You want to give it a look. Again, I have a position there. Louisiana Pacific, Dow related, railroad stock, right? So I'd mentioned this one. Let's look at that. You see that 8 out of the last 9 days inflow for Louisiana Pacific. That's LPX. So this is the kind of shit that I want you looking for. You don't understand trading. You don't understand options. You just want to follow along. That's fine. You want to find a stock that has demand, all right? It's like if you buy tickets for like a concert. You want to be the scalper for that concert that everybody wants to see. If everybody wants your ticket, you get to ask more money. The same is true for stock. You buy a stock that's in demand. If there's more demand than the supply, the stock price goes up. So that's LPX. That's a Dow-related stock. As long as the Dow stays strong, which it is, okay? And you can tell that by stocks like Carnival, which I'm sure is one of the next ones on my list. Okay, I've got International Flavors, IFF. There was some crazy call activity the other day. I'm actually going to remove it. I don't really care. Now, here's a good stock with an excellent chart that just started rotating, okay? This one has at least 20% left to go, which means I'm going to move it to the top of my watch list because I probably should have bought in some today. I'm not really sure why I didn't. I think I was looking for a confirmation on the reversal. You ready for the stock symbol? Here it is, BEKE, all right? BEKE, it's called KE Holdings. It went up 7% today, a whole point to 1762. But here's the point. I say this stock and screenshot this will go over $21 in the next, probably in the next week, but I'm going to go 2 weeks. I'm going to move this one to the top of my watch list. See, when I get excited about a stock like that, I'm not touting it. I'm not telling you exactly, oh, my speaker went out. Shoot, I wonder how long that's been out for. I'm not telling you guys, oh, there it is working. I'm not telling you guys to buy everything like that. I'm just telling you guys that I like it. And when I get excited, that means it must really look good. Like something's sticking out to me where I see the chart definitely hitting 21 on that one. So again, that's BEKE. And if you look at the chart, it looks great, man. So I get real excited about that one. All right, next one, Workhorse. Now, do I like Workhorse? No, but I saw some action this morning, so I added it. It was up 3%, and it ended up going about 10% up today. So we'll skip that. I've got AMC. I like to follow that. That's just under $40. I believe when the Dow has a decent run and the market's strong and we pass infrastructure, which should be coming for a vote on Thursday, I believe AMC could have a 20% run, maybe even a 30% run. And we know I'm not claiming to be an ape because I don't claim to. I don't need to be an AMC. I make 50% in every one of my plays. Well, at least these days I do. All right, my next beauty, Cassava Sciences, all right, SAVA. I did not play it today. It went up 10% today. It was already too rich for my blood. But if I'm looking at the stock, I mean, it wants to run. I would never chase. I would look for a day where it was off maybe 12%. So I'm looking for a day that it drops $7. Even if it goes up tomorrow, say it goes to 72 tomorrow, I'll be looking for the day that it drops $7, that it goes to 65. And if it goes to 67 tomorrow, I'll be looking for the day that it goes to like 61, all right? I want the discount. When I see that major dip, and we did this a few times. When it dipped to 38, we got in, it went to 48. Then when it dipped to 48, we got in, it went to 58. There was just no dip this time. We were talking about this bad boy last week, and it kept getting stronger every day. And I said, be careful. Fridays like to sell off. I'm not entering anything later in the afternoon. I was waiting for a dip. It just didn't dip. So you can take out Sava. The volume's up. It used to be like 2-3 million a day. Now it's like 10 million, 11 million a day. That's a strong sign, especially when there's demand. It's probably institutional buying. I've got BlackBerry on here, which is BB, at $10 a share. Now, I'm waiting for BlackBerry to turn into $15 a share. It's going to happen in the next year. So if you're a longtime stockholder and you don't like options, I think BlackBerry is a safe investment to go from 10 to 15. The reason it's my watch list, when it goes to $10 to about $11.50, that's not going to be the end of the run. That's just going to send off an alert to me like, hey, Matt, you're right about BlackBerry. It's going to start moving soon. So it might not be till like November, December, January. I don't know. It might be news or earnings that moves it. But when I get that pop, I know that it's going to be active. And when that pop is sustained, I know it'll go from 12 to 15. So I'm looking to be assured first. I'm not looking to jump in because I think I'm going to be right. I want to make sure I'm right first. Understand that lesson. All right, here comes a good turnaround stock, but not yet. It's a Cathie Wood play. It's BLI. Remember we mentioned the short last week, Scorpion Capitals, and this stock was $29 when I alerted that it was a short play, and I wrote it down to $25. It is now $21.25. Now, after that, after it went to $20, it spiked all the way up to $26. So it made it to my watch list because any stock that can move 30% in a 3-day period makes it to my watch list. You just have to be on the right side. So it is back at $21.25. So it is a 3-letter stock. Cathie has a position. She's probably going to be adding as long as the Dow is strong. And again, the Senate doesn't screw up and we don't go over that debt ceiling. So understand what's happening with the markets right now. The Republicans say we have a debt ceiling that we're not going to raise, which means we're going to default on a payment. And the Democrats say, no, we'll raise the debt ceiling and push it through. And the Republicans say, we're not going to let that happen. We'd rather the U.S. default. And the Democrats say, but we've never defaulted in our life of payments. Why would we choose now? So we'll see what happens. Again, that's why I'd be a little hesitant in the market. But let's go on my list. Of course, I have the SPY because I like to look at that one. Then I have BBIG, which made a big pop this morning, 20%. Finished the day up 10%. Okay, I went long on Twilio, but I haven't looked at the stock in a while. I'm still very strong that Twilio will go back to I'll get at least 8%, maybe more on that one in the next 2 weeks. Twilio, a 4-letter stock. So it might struggle if tech is struggling. But I still like the chart. So it's on my watch list, but I'm not in options. Remember, I've got stock only. I have 1,000 shares. It is damn expensive, but it's sitting in my retirement account. I'll sit this one out for a while. I thought it would go to 420. Remember my favorite number. We mentioned that the other day. All right, so let's see what else we got here. Okay, then I've got Carnival. Now, if you look at the 1 month on Carnival, because this is what I tell you, look at this chart. I mean, this is why I'm talking about Carnival. You see on the right of the screen, 4 straight inflow days and a slide. Do you see that? That's heavy demand. And what did I tell you all this time? When the Dow finally gets strong, you're going to see the same looking chart for casinos, for cruise ships, and for airlines. And I'd rather not be in the airline play right now because I heard third quarter numbers might be down a little, which means earnings might be down. So I'd rather be in the cruise ship. So exactly what you're seeing there. If you want to play an airline play without playing like Delta or JetBlue or American, you could play Boeing as a play, okay? Boeing should do better than the airlines themselves because Boeing has orders up the wazoo and they will keep producing planes. So as long as they have parts and there's no supply chain issues. Oh, interesting fact about the market, and this is going to hurt retailers in the fourth quarter. There are going to be tons more supply chain issues. Walmart, Target, instead of using freight carriers that they usually use by sea coming across the ocean right now, they have hired their own fleet. Instead of outsourcing it and paying a fee, they have actually purchased ships of their own to bring their goods to the U.S. So they're kind of thinking ahead, but not every company is going to be like that, and it's more costly, and they're going to be missing products and goods because nobody gets it correct the first time out. All right, so there are going to be a lot of issues when it comes to the fourth quarter. That's why I tell you, even if you're in a stock, it's good to take profit. Nothing goes straight up. If you see a stock going straight up right now, if I had Carnival, I'd be selling. I'd be selling right now, 26.38, 4 straight inflow days. I would wait to get back in around probably $25 flat. So yeah, I think it'll go down 6%. It could explode. Now I told you guys when it goes up 3% every day, it could continue. So unfortunately, or fortunately, I stay away from that one. It will move with the Dow. So I mentioned it will move with the market. So if you think the Dow is going to pick up 200 points a day, and that's going to, or 100 points a day, that's a great stock to be in. However, we know nothing goes straight up. All right, let's get back to that watch list because I think I'm killing it today, and I think you guys are learning a lot, or at least hopefully you're adding certain stocks to your watch list. You've understand that I haven't been talking about crypto stocks or anything like that because there's a chance, I mentioned this on, Thursday, that Bitcoin and cryptos could go back down to like 33,000 in worst case scenario. Some people say 28. I don't think so. I think 33, 34, but I don't see that happening. I know it has good support at 40,000. The point is, I mentioned this, China still owns over $10 billion worth of Bitcoin. The U.S. government owns $3.3 billion worth of Bitcoin. So if China wants to give us or anybody else a big FU and say we're still the boss, guess what they could do? They can unload a ridiculous amount of Bitcoin and force it down. Now, there are huge whales on the sidelines that probably hope China would do that and they would just buy it all up. All right, so let's keep going. I've got TDOC on there. Really shouldn't be on there. TDOC. It's not really doing much anymore. Oh, I do have some good companies coming up for you guys. Very good companies. Haven't talked about them in a while, and we used to talk about them every day because one of them would go up a few points every day, and since then it's gone down a few points every day. So we wrote it up. We just didn't write it down, but it's coming up. So I've got Sorrentino Therapeutic, SRNE, because I suspect that will go past 10. So once I see the action I need from that stock, and let's take a look at the 1 month there. Let's see what we got. Yeah, the volume's not large enough for me. I need to see 8 to 10 million a day, and it hasn't done that in quite some time, over a month. So I would just, on my watch list, not do anything. All right, then I've got AI, which is computer AI is CA3. The chart is still, the volume is really light. It's not going to move anytime fast. So if you followed me into that one, I own some stock in that one. I'm just going to be holding. Okay, electric and energy companies, LEV. And some of you on Webull might have got like a free share a long, long time ago. But this stock, the chart looks amazing, but volume is light. In fact, I would stay away from this electric play. I would probably find another electric play, which I've mentioned before. Where's the other one I've mentioned? It's, here it is, LNG, which is Shireen Energy, LNG. It's at $96. Remember, I mentioned this one at $88 a week ago. I said this one seems to have demand, seems to go up. Today, if you look at the 1 month chart, there was outflow after 5 straight inflow days. So today was outflow and the stock went up. So some people will say, bad sign. That means stay away. It's quite the opposite. If your stock goes up and has been for a number of days, it's called consolidation. Even when the stock's consolidating, it's going higher. So there's a good chance, especially with the Dow being strong, that LNG topples $100, maybe even as early as Friday. So that's going to the top of my watch list as well. I mentioned now 2 stocks to the top of my watch list. If you missed the first one, I will repeat it. It's BEKE. And let me just take it to the top. Hold on. And I've got a couple more here. All right. Let's just add that to the top. With technology, I'm not the fastest tool in the shed. So I just make sure I get it right. So if you're like me and you're trading, whether it's stock or options, you better damn well make sure that you're doing it correctly. When you go on your phone and it says open a call position, say you're bullish on a stock, you want to make sure you open the position, you buy the position to open. You can't buy the position to close. It gives you 4 options on everything. Just reread everything. Again, Robinhood, I don't like them. Webull's better, although they're very into censorship. Not very happy there. All right, I've got Win Casino because I mentioned I traded this one so many times in 2020. I traded it 83 times for 25% 100% profit. All right, volume's been picking up. Volume's still strong today. It used to do like 2 million a day. It's doing 6 million a day. The chart is bullish. 5 out of 7 inflow days with strong inflow. This stock will easily be above $93, probably higher. So this one's going another 10% in the next week. Again, I'm going to move it up because unless I analyze the stocks like I'm doing for you right now, I know it's going higher. But now that I put a target on it for myself of 10%, that makes it damn good. If I tell you a stock like BEKE is going up 20% if it tops out, then that's a damn good return. Okay, so let's get back to that was Win. Okay, I've also mentioned I got Las Vegas Sands right under it because it's going to follow. All right, another 4-letter stock, Affirm Holdings, right? That's like a pay technology services. They entered into a contract with Apple. It's like a buy now, pay later. So they charge you interest. The company's huge demand. I mentioned it when it was 124. It went back to 108. I said this is a great time to buy. It went to 105 after I said it was a great time to buy. But if you look at it now, it's up like 3.5% today to 128. So I would put a cap on that stock, and there was a little resistance around the top at 130. So again, there is demand for that stock, but I think tech might have a battle coming up in the next week or two. So if that stock does pull back, I have two strategies. If it pulls back to 112 or 114, I will be buying that stock shares only. If I think it might pull back to 112 or 114, I will be buying puts when it hits 130 if tech is red. If it's a green day, the stock could push 134. If it's a red day and the stock opens at 130, it could go back down to like 122. So always have a strategy in mind. And these numbers that I'm shouting at you are very important because it lets you know when to take profit and when not to take profit. If I tell you if it's having a bad day and I'm looking for it to go down 8 points, if it's down 2 or 3 points and I'm up 30%, that's not good enough for me. I tell you not to be greedy. But again, if you have a long strategy in mind and a specific number, then wait it out. Just be right about it. All right, then I've got Citigroup. Why? Because I mentioned as the 10-year goes up, and this is good for any banking stock. As the 10-year goes up and interest rates go up, banks make more money. As interest rates go up, when they loan out money, either to their big-time investors or whatever they're loaning the money for, they get to make a bigger spread. The same way when you buy options, there's a bid and ask. If the interest rate's low, their spread is small. When interest rates go up, their spread gets wider. Banks make more money. So as interest rates go up, they won't even wait because they know earnings will be good. I would look at Goldman. I would look at JP Morgan. I look at Citigroup. Again, Citigroup was $69 when we spoke about it. It's $72. It was up 1% today, which is $1, so that's 71. But there's been 4 straight inflow days. When did we talk about Citigroup? It was last Monday when it was under $70 and went to $69. It's now $72. That's 5%. 5% for a banking stock is awesome because banking stocks limit your risk. What could hurt a banking stock? If inflation or interest rates go back down. So if you think the 10-year is going back down to 130 or something like that, then yeah, get rid of banking stocks. But I think the 10-year is going to finish the year around 2%. That's what everybody's shooting for. And when they're shooting for it, they make it happen. That's what the government does. All right. And then I've got SONN, which is my cheap penny stock, okay? And yes, I own a lot of it. But I won't tell you how much. SONN, it's 62.5 cents or 62.7. I bought in at 63.8. So I'm still down a penny per share. So let's say I have 100,000 shares, right? I'm down a penny per share. That means I'm down $1. Okay, so understand that because that's pretty close. I think I have like $65,000 invested in it. Okay, so I guess I did tell you. Then I've got Canadian Solar, which is an energy play. Again, I wouldn't chase energy. However, if you look at the 1-month chart of Canadian Solar, it can easily pick right back up to $37. It is at $34.67. So Canadian Solar is CSIQ. Yes, it's a 4-letter stock, but it's an energy play. It's a green energy play. So especially with infrastructure bill possibly being signed off on Thursday. Understand, infrastructure plays include Blink, Plug, ChargePoint. Okay, ChargePoint went from $20 to $30 or $32. It's back around $20. Blink, I think, picked up 4% today. Plug, 5% today. So I just wanted to tell everybody, there are more stocks on my list. I don't want to overkill you because there's a lot of information to set in. So if you think you're getting value today, see that sign right there? Hit that like button for me. Oh, real good. If I missed a stock, it's not on my watch list, but you want me to look at it for tomorrow, make a comment. If something I said about my lesson was good for you, I'm asking you guys, make a comment. I want to hear this shit. I like being appreciated. So if you're like, Matt, it killed, or Matt, it was lacking. And for those 3 people who give me thumbs down, go out and kick some cats because that's what you do. I spoke to one of my friends on YouTube. the same 3 of you follow him around and tell him, 3 of you. And he doesn't even start the video yet. 3 dislikes. And he's like, I didn't even say anything. How could they not like me? Have a good night, everybody.